Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cash Flow podcast. Our mission is to help you build and maintain massive amounts of cash flow through income producing real estate investments. Our guest for this week's show is real estate development expert Meg Epstein. Now, Meg is the founder of CA South, a vertically integrated real estate development and investment management company based in Nashville, Tennessee. Over the course of her career, Meg's been involved in the development and construction of over 1 million square feet of residential and commercial real estate space, representing over 780 million to date. Meg is a licensed commercial contractor, licensed residential contractor, CCIM candidate, and licensed real estate agent. She also keeps a private pilot's license and bareboat charter sailing certification. So guys, with that, it's my honor to welcome Meg Epstein to the show. Meg, how you doing today?
I'm good. Thank you so much for having me. I appreciate it.
Absolutely. Thanks for joining us. And I know we were chatting a little bit before we started rolling here, and but I'm going to back up. I know I'm going to ask you to be redundant a little bit. And so for those that aren't familiar with you, Meg, that don't know, who you are, your background, CA South, exactly what it is you guys do. Maybe take a few minutes, tell us a little bit more about the company, and then ultimately we'll dive a little bit into more of the personal side of how you found your way into real estate.
Sure. I started CA South in 2016 in Nashville after moving here from California. And, now it's sort of a darling investment market, but at that time it was just starting to turn, and I saw some opportunities first in the condo space. And so I focused on that, just seeing a huge lack of supply, and then also rolled out an industrial platform sort of for the same reasons. And now have grown it since then. We've primarily only had, we've never syndicated deals. So we've primarily only had private equity investors, and become a bit more institutional, and rolled out several industrial projects, multifamily opportunity zone deals, and as I said, mixed use condo projects. So try to really differentiate ourselves in terms of the design, and kind of brought a California aesthetic to the South, which was a little bit different approach to development, and just tend to be very data driven in the way that we choose our projects and strategies, and have been very fortunate to build up an amazing team around me of very qualified people, and just keep, doubling in size every year. It's been exciting.
All righty. Fantastic. I've got to ask a question, what was really the catalyst for leaving California?
So my husband's from San Francisco, but when I met him, he lived here. So I really didn't,
Okay.
I was very, I moved very quickly. Once I met him, I kind of knew he was the one, and then moved. But he chose to leave California because he's an entrepreneur. He was setting up a company, and he's just going, why am I going to set this up in San Francisco and deal, like with employees and the taxes and everything. So he came to Nashville for a weekend and said, hey, I'll give it 6 months. And that was in 2012, and just a little bit early, but kind of the same story you hear from everybody here.
Given that there's been a major shift over the last, almost now 2 years since COVID started, lots of companies allowing their folks to telecommute and, kind of work remotely from wherever they choose to live. So that's obviously been a major cultural shift here for the past 2 years. And, when you uprooted from California, brought your company to Nashville, I'm not sure exactly what the structure looked like with the rest of your team. Did they come with you? Are they remote, what have you? And so just wondering what the logistics look like from moving basically, not entirely across the country, but it's a fairly substantial distance.
Yeah, actually, it was just me then when I moved. So I pretty much started the company once I moved there. I did do development in California. It was mainly in the high-end residential space. So, 30, 40, $50 million homes. And when I moved here, I realized that wasn't going to be a market because there's not, a bunch of tech execs and movie stars here. But so I thought, well, if I could do a $50 million house, then I'm pretty sure I could build a building, commercial building. So that was sort of the genesis of CA South. So I didn't have to deal with that. But a lot of people, even just since COVID, relocating, even in our neighborhood, just tons of New Yorkers and a lot of Californians. So it's definitely changing rapidly. And I think people are very pleasantly surprised once they get here. It's not, when you think of like, oh, I'm moving to the South from New York, there's a lot of culture and diversity and the things that you'd think you'd miss. So.
Yeah, agreed. And so talk to me about your personal background, ultimately how you found your way into this real estate world.
Sure. I've been in real estate since I graduated. I went to UCLA and I graduated in 2008. So I've always had a strong bent for finance and accounting and loved numbers. And I was sort of set up to go into an analyst role, like a typical out of college role. And I diverted senior year because I was in Barcelona and fell in love with architecture. And I knew I didn't want to be an architect, but I knew I wanted to be a part of building real estate. And I just always loved real estate. And so I thankfully got a job when I was, I was running around campus and I got a job on a project in Bel Air, right behind the school, building a French chateau for a general contractor. And so it was a little bit of a, derailing my path, but I'm really happy that I made that choice then, because it sort of set me up in terms of just understanding construction and project management and the way the job sites are ran. And, I was in a trailer for years, eating taco off a taco truck, and did that whole thing and kind of have that background. So it definitely helps now when I go by my job sites and I can understand what's happening. And so that's where I kind of started in terms of, real estate. I'm very lucky because there were definitely a lot of people in construction that were a lot more experienced out of work, but at that time, but I got given a chance by just a very non-conventional, I guess, GC that was wanted, sometimes it's like you can't teach an old dog new tricks. So it was just a new perspective, and I was very organized and, ran the job site. I mean, I had like 50 guys. It was really fun.
Wow.
And they put a superintendent on that knew actually about construction. He taught me a lot. So.
No, it's fantastic. And just give us the scope of that project. I mean, how big of a deal was that?
That was a 60,000 square foot chateau. So wow. It was someone's house. It was actually a self-made guy who was also a real estate developer. I thought, well, he knows what he's doing. So he kind of, helped me a little bit. He was on the job site every week. And so he kind of mentored me, and I learned a lot from him as well. But he was just building his personal home, and people they go, oh, you have a background in residential. That's a lot different than doing big commercial projects or managing a fund. But it was honestly a lot harder in terms of decision-making and personalities and the amount of consultants that go into building a French chateau, and, query, like getting stone from a quarry in France and sending it all to China and sending it back to Los Angeles. And it's much different than, the supply chain issues I deal with here now. So set me up for sure.
Okay, fantastic. Now, talk to me about transitioning from these larger, multi-million dollar residential projects over to the commercial world. I mean, it's quite a shift. I mean, on many different levels. And so, talking about some of the challenges that you face from, kind of moving over to the commercial world, doing larger residential projects, multifamily projects, and also then industrial. Like, what were some of the barriers that you faced, and how did you push through them?
Yeah, the good thing about any sort of development, or or what your listeners being investors, it's pretty much the same process. It's you find the land, you got to get it in, you have to look at the entitlements, get the permits, get the contract for the GC, get the financing, and sell it or rent it, right? So that process doesn't change. For me, what really helped is I did the CCIM courses, and those really gave me the fundamentals of just the background of investing in real estate. And as any investor, I would recommend that, just to understand, basic cap rate, NOI, like the basic terms that you need to know. So that definitely helped me. I don't think I could have scaled up and done what I've done so far in an environment where I was like in California, because there was a level of a lack of like sophistication and aggression and from the local players, that I was able to kind of come in with an outsider's perspective and go, wait a second, like this is extremely affordable. And if someone can live, in a building like this that costs 20% of what it is or half of what it is in California. And so those were sort of the fundamentals, but it definitely was hard. I mean, I started with no capital, zero personal capital, no investing relationships, no institutional relationships. If I look at someone in New York that understands that financial world where most of my investors are from now, I didn't know what investment banking was, or the difference between a limited partner or a general partner. And so I kind of had to learn that just by doing a lot of cold calling and talking to a lot of people and getting started that way.
Yeah.
But I found that Nashville was it was a very friendly place. I, had some partners in my first initial deals that were really integral. And it was mainly just getting the first deal across the line and getting that first investor, which took months and months of cold calling. And so once you get your first deal, there's a lot more momentum, but transitioning from, oh, hey, I used to do homes and now I want to build a commercial building and I don't have a track record. Oh yeah. And I don't have any, like,
Yeah.
but I kind of got lucky in that sense because there's been so much investor interest, in Nashville. So, yeah.
I want to dissect that first project, there in Nashville, because obviously that laid the foundation for what you've ultimately built today. And going there with no track record, at least in not in the asset type that you intended to construct, residential, multifamily, and industrial, but also not with you didn't have a Rolodex of investors, high net worth individuals that were looking to stroke checks on your first projects. And so, I mean, you really were starting from scratch, and it's hard to get traction. I mean, it is. I mean, you obviously had experience, but it wasn't, in a lot of investors' eyes, it wasn't the same type of experience. I mean, it was a very different, very different world and experience type. And so, talk to me about those cold calls. Talk to me about landing those first couple investors. I mean, what was it that you felt piqued their interest that, they were willing to give you a shot? They obviously, they were willing to take a bet, take a chance with this incredibly bright woman that is, not new to the business, but kind of new to the business, and also very new to this area, and didn't really have much of a track record. Talk to me about that a little bit.
Sure. So, I mean, I told the story of my very first deal at my retreat last week to the team because they obviously don't know, I was like, guys, I'm scrappy. Like, this is not what you see today where we have, a public REIT invested with us. It's like when I first started, I never really actually wanted to be a developer, but my first deal, I was on another run. I guess I should just keep running. I don't even like running, but I was on a jog and I saw a waterfront deal and a waterfront for sale by owner site. And I thought it was in a really good location. And if you ask anyone from Nashville about the waterfront, they were never excited about it. And I'm going, hey, it's on the water. This is like a booming city. Like, this is going to be cool, you guys, And, that was how I found the first deal. And I've always, in the beginning, the deal was it was like a developer was selling it. He just needed some financing. And at that time, I didn't know anything, I mean, I understood construction, but I wasn't a developer. And so I think I put it on like Bigger Pockets and got some investors and just kind of was like, oh no, I can come up with this. And I, just kind of cold called and put that together. So that was my first deal. And I would say that I'm actually just wrapping that one up now, and it's super successful because it had a long, I had to go through a lot to get it done. But the first thing I did successfully, if you're asking like for your listeners, is I partnered with people that had done it before. Or my very first deal with the private equity fund, it was an architect who was also a builder that really understood the development end of things. He just didn't have the capital to do it. And so I partnered with him, and really just, my very first investor, I cold called off of the CCIM directory. And at this point, I'm like, where do you get, multifamily capital? And I knew that the deals were big enough. It was a $25 million deal that I wasn't going to syndicate that. And I just didn't I grew up in Sacramento on a pear orchard. My parents didn't go to college. Like, I just didn't have that like country club network. Right. Mm-hmm. So I really just did a lot of like searching online. I bought directories off of familyoffices.com. Like, I really just looked online and called a lot of people and talked to a lot of people. And the guy that gave me my first deal was on the CCIM directory. And, I had to bug him, and bug him was like the 8th call. I was like, just come down to Nashville. And it's like, everyone was kind of hearing about Nashville at that point and wanted a deal. And the thing about Nashville is it's such a good old boys network that there wasn't a lot of, it was like, now all the New Yorkers want to be in Nashville, but there wasn't that bridge yet. And so he was based in Michigan, and I just said, he's like, yeah, I've heard about Nashville. Okay, I'll come check it out. He met me. He met my architect builder. He's like, okay, you guys can pull this off. And he structured it in a way that was very low risk to him, and and he could take over if I did something wrong, but there was a lot of upside for me if it was a home run, and luckily it was, and there was no problems, and it ended up being great. But that was the first one, and then once I did that, it was really, I did another one with him and another one, and then started broadening our platforms of asset classes, and just did the same thing. And I still do the same thing. I still have a CRM. I still reach out to investors and keep relationships with people. And now I have a much bigger Rolodex, but I know what type of investors, now I know what they want, and if I have an industrial deal and I have a list of people that are looking for industrial or multi or op zone or condos. And so just kind of had to build it that way. But
no, that's fantastic. I appreciate the description of being scrappy. I mean, like it's really truly what you have to be in this business. Again, less you come from that country club background, which I do not. Kind of same, lots of similarities of your story to my own, of just not having that built-in Rolodex, not having that family tree that kind of that tears off in many directions. That it's just a matter of a phone call to a family member or a friend, and they can put me in contact with tens of millions of dollars. That just never really happened. It was all about being scrappy, really just working a little bit harder than the next person in line, because we had to, right? We had to in order to get to where we are today. So I can appreciate that. No, congrats to you. That's awesome. It sounds like you're rounding the corner on that first project. I mean, are you at a point where you're looking to exit out of it, or what is the long-term plan?
yeah,
With
that's just, I'd say I almost had the very first project. It's just sort of, I told the whole background and all the things we ran into with it at the retreat, but it was a condo deal on the water, and I could not for the life of me get anyone to believe that I'd sell it at $550 a foot. Now we're selling it at over $675 a foot. It's a total home run, but it took many years. That was my first deal. So that's being exited. The one with the private equity fund has been done for several years. So we're around, like, we're full circle on like 6 deals or so. Yeah. So it's just a timing thing, but yeah, all those in the beginning, now I do all institutional term sheets and know all about waterfalls, but in the beginning it was just very like, not handshake. We had contracts, but it wasn't like based on, I didn't know what I was doing. So
talk to me about moving over to the institutional side. I mean, there's obviously pros and cons associated with it, when you compare it to just high net worth individuals. And so talk to me about, kind of what you see as some of the big benefits of, working with a public REIT versus just working with your typical batch of high net worth accredited investors.
Yeah, and again, I've only really syndicated that one deal. I mean, and really, I wouldn't even count it as that. I've always had a very no nonsense numbers approach to real estate, and I'm not a super patient I don't want people to have my cell phone, and investor relations is not what I wanted to do every day. And as our deal sizes have grown and there's been so much investor interest in Nashville, for us, we've just done very well. I mean, it is the same amount of work to do a $100 million deal as it is to do a $5 million deal. It's actually, because with the $100 million deal, you're hiring the best people to manage it. So I'm raising $40 million, and that's actually an easier check to get than coddling together a bunch of $50,000 checks and dealing with people that just aren't, it's fine, but they're just not sophisticated. So they have lots of questions, and you have to explain things like IRR. And I didn't want to, and it's a great strategy. Like, people have that, and they have a lot more natural inclination for that than I think it is it's much discretionary. And, but for me, it's like, if I want to do 10 deals and I'm getting to $1 billion, then there's no way that approach is going to be, effective. If I can get 100 million from a public REIT, and, they're sophisticated, they understand pro formas. And if I check those boxes, then that's it. It's not, they're big boys and girls. So it's kind of like, that's the approach I've taken, but it's not for everyone. It's definitely a lot more formal. It requires a very sophisticated team, which means, very, expensive, I guess, but also just amazingly, like, these are the people I want to work with. Right. I don't want to be, so.
No, it's all relative, right? And no,
Yeah.
there's no wrong, right or wrong answer there. I just was interested. We've gone down that path a few times, but never really moved away from the model that we've created, right? However, our projects aren't typically 50 or 80 million dollars in size, right?
Yeah.
They're smaller. We do a larger scale, but it's a different business model, and we've got the pieces in place, I guess, on the investor relations side that we've just had to build over the years. And now the model's there, the infrastructure's there. But you're right.
It's
I mean,
a
the average,
great model. Like
yeah,
I question it all the time. Believe me. I mean, I'm on my second fund, and there's a whole, there's a whole dynamic around having to raise funds and place funds, and if you can do that model and you have a vehicle to do that, I do think it's amazing. Like that first deal is going to make just as much as a $50 million deal because it's that sort of boutique size, and that's something that I've struggled with. Is like, do I want to get away from? Yeah, I could do $100 million deal, but that's a very competitive space. And if you stick to that boutique size deal, that's maybe 10 to 30, there's a lot of margin there in the right market. But it's just a different it's a different model, and I don't think there's pros and cons to both. And having that group where you can have that discretionary capital is invaluable. I have to get it from more family offices. It's the same sort of discretionary capital, and it's very hard to come by, and it's very network based, and it's a lot more organic. So in the meantime, we do the institutional thing. So I think it's, if you can do that and you have the infrastructure, that it's super admirable. I mean, one of my good friends, he managed a pretty institutional fund, and he went back and he was like, nope, I just want to like play golf and like, hang out. Like, I just want to know who's investing with me and, make a difference in their lives. And it's just like, it's just two different approaches. So
yeah, absolutely. So switching gears a little bit, talk to me about what you're most excited about today, as far as project wise.
One of my big focus, Nashville has been developing the riverfront. As I mentioned, it started with my very first project. And, Nashville is still in the South. We're growing super quickly. And there's not as much foresight with everybody here to be like, hey, this is Central Park. And if you mess up Central Park, then it's not going to be New York. So it's kind of the same thing, like with our greenways and river and kind of developing the city infrastructure. I sit on a Nashville Civic Design Center, which really focuses on the parks and walkability and that type of thing. And so that's something I'm very passionate about. I have a couple of projects upcoming that are on the riverfront. And so I'm really excited to kind of help that, because I do think it'll change the landscape of the city in a positive way, not just like build a building. And then we are also starting to expand into other southeastern markets, St. Pete being one, Savannah, Charleston, Charlotte, where we have earmarked, nothing set, but we're developing a pipeline to roll out one of our platforms. And so excited to kind of, continue to grow for sure. So those are two of the big things.
Okay, good deal. And then outside of the professional work environment, I know we chatted a little bit before we got on here, but ultimately talk to me about personal interests. I mean, what do you do to decompress on your downtime when you're not building, huge projects?
Yeah. I know it's funny because I tell people I'm lazy and they're like, no, there's no way you're lazy, but I'm really like a sedentary person. I like just,
I don't gather that either. I don't gather that at
I
all.
know, but
The term scrappy doesn't really pair well with sedentary. I mean, like the
I
two
know, but
don't go together.
I know I tell people, my husband literally calls me Panda. Like I'm very like, when I am so, my week, I wake up at 4:30 in the morning. It's very scheduled and packed. All the way to work dinners. And so by the weekend, I'm just like, spa, walks, hanging out with my husband, reading. I definitely like take personal improvement courses. I really try to spend that time re-energizing and relaxing and cooking and the things that are very low key, because my the rest of my life is so forward facing, I guess.
Yeah, no, that's great. I appreciate you sharing that. And for those that want to learn more about, Meg, what you guys have going on, I know you keep a lot of info updated on your website. So please share that with the listeners, your website, as well as any other social media platforms that you spend time on and provide updates on.
Yes, our website, casouthdevelopment.com. We do posts on LinkedIn quite a bit. CA South is our LinkedIn page. And then we have an Instagram, CA South Development as well. That's just sort of more of the real time kind of backstories, job walks and things like that.
Well, fantastic. Well, Meg, it's been a pleasure having you here today. Appreciate you joining us, and wishing you all the best as you continue chugging forward in Nashville.
Thanks so much, Kevin. I really appreciate you having me.
Alrighty, guys, that's all we have for this week's show. So until we meet again next week, this is your host, Kevin Bob, wishing you huge success. Take care.